and it's a function of where you are in the cycle. You want to de-risk a bit earlier than you feel comfortable doing.
Yeah.
Because then the back end of the cycle can play out short or long. It doesn't matter. But you need to have enough wealth that you're feeling a little bit hubristic, like, oh, I king shit. That's when you take some money off. As soon as you start thinking, well, if I just double it again, I'm going to be really, just take some money off. We've not got there yet for me. So
Bitcoin, the world's largest cryptocurrency by market cap, has continued to demonstrate remarkable resilience over the past several days, holding firmly above the $100,000 mark for more than 25 consecutive days. As of June 4th, it is trading around $15,187, signaling a period of relative stability following its all-time high of approximately $112,000 in late May. According to Raoul Pal, renowned macro analyst and former Goldman Sachs executive, this recent price movement marks a new phase in the Bitcoin and crypto bull market, a phase he refers to as Banana Zone, Phase 2. He predicted this in a social media post from early May, stating, "Feels kind of fruity. Banana Zone Phase 2. It should run until August or so with short sharp corrections en route. Please enjoy your fruit responsibly." In a follow-up post, Pal clarified that the cycle's peak will not happen in August, but rather toward the end of the year or early 2026. However, he did warn that a correction is likely in August before the market enters what he calls Banana Zone, Phase 3. In a recent podcast, Pal addressed one of the most pressing questions crypto investors face during bull markets: when is the right time to sell for maximum profits? Although he encourages long-term holding, Pal also promotes the concept of lifestyle chips in crypto investing. This strategy involves converting part of your crypto gains into tangible, life-enhancing assets. For example, Pal used a portion of his earnings to purchase land and build a beachfront home in Little Cayman, a personal project he designed and constructed himself. He emphasizes that these kinds of investments are not only emotionally rewarding but also provide security outside of market volatility. According to the Real Vision CEO, lifestyle chips help investors convert digital profits into physical assets that are less susceptible to sudden market shifts, while also improving quality of life. While Pal hasn't cashed out his lifestyle chips just yet, he offered several key factors to consider in determining the right time to do so in 2025. As we bring you highlights from this conversation, don't forget to like and share this video, subscribe to the channel, and turn on post notifications for more. You already know the MicroStrategy story: one company, one asset. They transformed a sleepy enterprise software firm into a multi-billion-dollar Bitcoin proxy, becoming legends in the process. That playbook redefined how corporate treasuries are viewed forever. Now, imagine being early to the next MicroStrategy, but this time, the asset isn't Bitcoin, it's Solana. And the company? It's backed by real revenue, growing consumer brands, and a scalable balance sheet. Meet Upexi, a NASDAQ-listed company that's quietly building one of the most innovative capital strategies on Wall Street. At first glance, it looks like a solid e-commerce player, and it is. But beneath the surface, it's much more: a Solana treasury vehicle backed by operating cash flow and institutional capital. Upexi has already acquired over 2,011,500 Solana tokens, worth more than $30 million, and they're on track to build a $100 million Solana treasury. This isn't an experiment. This is a strategy, and they're not doing it alone. Upexi's Solana deployment is supported by GSR, one of the world's top crypto trading firms, providing liquidity and execution for some of the biggest names in the industry. What truly sets Upexi apart from MicroStrategy is this: while MicroStrategy holds Bitcoin on top of a stagnant software business, Upexi is generating real cash flow through its portfolio of fast-growing consumer brands in wellness, pet health, and personal care. These are high-demand categories, with recurring revenue streams across Amazon, Shopify, and Walmart. Rather than relying on debt or dilution, Upexi is financing its Solana accumulation through actual operating income, enabling a dual growth model: business revenue plus crypto upside. Why Solana? Because this wasn't a random bet. Solana processes over 7,000 transactions per second, with transaction fees well below a cent. It's energy efficient, lightning fast, and already supports real-world applications, from DeFi and gaming, to tokenized real-world assets and social platforms. And yet, it still trades at less than 6% of Bitcoin's market cap and only around 30% of Ethereum's, giving it massive asymmetric upside potential. Upexi is positioning itself as the go-to public equity proxy for Solana. Today, Upexi trades at only 4 to 5 times its net asset value, NAV. Compare that to MicroStrategy at 8.5 times or the Grayscale Solana Trust at 10 times. In bull markets, crypto equities with strong thematic exposure often trade between 6 and 12 times. Even a modest re-rating to just 6 times NAV could send Upexi's valuation to $600 to $800 million, a 5 to 8 times move from today's levels. And if Solana doubles? If Upexi grows its treasury to $200 million? Then you're looking at a business value between $1.5 and $2.4 billion, just like MicroStrategy in the early phase of its Bitcoin accumulation. But this isn't just about valuation, that it's a compounding engine. As Solana appreciates, Upexi's NAV increases. As they stake, they earn yield. And when they raise capital, they do it NAV accretively, meaning they protect and grow shareholder value. As more institutions seek exposure to Solana without directly holding tokens, Upexi becomes the first mover equity gateway. This is the kind of asymmetric opportunity serious investors live for, rare, early, and backed by fundamentals. Let's be honest, most crypto-native public companies are built on hype and speculation. They chase trends and disappear in bear markets. But Upexi is grounded in real revenue, supported by institutional partnerships, and driven by a long-term crypto strategy with Solana at the core. If you believe Solana will be one of the next cycle's dominant chains. If you want exposure without wallets and private keys. If you want a regulated, public stock with upside potential and downside protection. Then Upexi is the name you need to know. This isn't just another crypto stock, it's MicroStrategy 2.0, with better timing, better structure, and higher potential. Don't miss it.
I will, as I've talked to you before, take some lifestyle chips off. There's some things I want to do with my life. And so I've not had any big capital expenditure for 5 years now. So I would like to be able to do something. And then, yes, I'll do an asset allocation shift, whether it's to, I'm not one to really go out of the market. Yes, a bit of cash, to have cash buffer, but I'm not one to go out of the market because I don't think you know the shape of the downside. My fear is that Bitcoin only goes down 40% this cycle and everybody sells out and says, well, I can buy it down 70. Isn't this an easy game? And it doesn't go down 70, it doesn't go down 60, it doesn't go down 50, it goes down 40. And then it takes off again as liquidity comes and everybody's caught offside. So I'll probably allocate, whether it's towards Bitcoin or whatever, I'm not sure. But yeah.
When you say take some lifestyle chip, do you have a time frame? Do you have a price target?
And it's a function of where you are in the cycle. You want to de-risk a bit earlier than you feel comfortable doing.
Yeah.
Because then the back end of the cycle can play out short or long. It doesn't matter. But you need to have enough wealth that you're feeling a little bit hubristic, like, oh, I think that's when you take some money off. As soon as you start thinking, you start thinking, well, if I just double it again, I'm going to be really, just take some money off. We've not got there yet for me. So, another larger move in the cycle, I'll then take some money off and it'll feel too early and I'll hate doing it and I'll regret doing it, but I know it'll be the right thing. You're not going to time the top perfectly. And the thing is let's say you're buying a house with the proceeds. You've done well, you buy a house. Nobody can take it away from you. Right? That's an asset that you don't have the fear of somebody stealing your wallet, getting your seed phrase. You don't have the fear of putting it in default. The bricks and mortar are yours. You own it. You've got a house over your head. You've got an asset that's a long term. That is an incredible thing. And so people just need to do that. And that de-risks your whole life.
Is there a chance that crypto doesn't end up being a truly game-changing technology, and therefore that it never reaches the $50 or $100 trillion in value that you're forecasting?
So I had a conversation last night with one of the most famous VCs of all time, who was he's in crypto and was in fintech. He's still in fintech. And he was worried about this. is the talent density moving to AI. And I hadn't really thought that through, but he said, look, I don't see developer growth growing fast enough. But, one thing I do know is crypto has a superpower, behavioral incentives of tokens. And in AI, you might get a nice job. It's not clear whose equity is going to be worth anything, but tokens are fast to accrue value. And as the market starts pushing higher in the phase 2 of the banana zone, they'll come. So I'm not overly concerned by it, I think.
When is the banana zone phase 2 starting? Well, as far as I'm concerned, it's started.
Last time it started.
That's right, and that was the phase 1. We had the correction, and now all the forward-looking stuff that people posted on X every day said, just go on. Nobody wants to believe it. Nobody can believe we can have nice things, but we can have nice things. We're just patient.
What's the craziest thing you've ever seen in AI so far?
I've gone deep down this rabbit hole, really deep. So the crazy thing is, at the simplest level, is I ask it pretty simple macro questions and ask for its thoughts on it. And it's now breaking down probabilistic outcomes in the future. So macro's hard for AI because it's future outcomes. It's not analyzing today or analyzing history. It's analyzing history and today and making probabilistic outcomes in the future based on unknown variables. It's doing better than 99% of all analysts already. And then it'll build you, it says, hey, do you want me to build you a widget so you can monitor these things on the dashboard? And it's like, and that's all in one prompt. It's like, it's phenomenal now. But it's not that. It's like the AI thing is a much bigger can of worms. And so it's a can of worms about consciousness. So are we creating an artificial consciousness? Are these models alive? And there's a whole mid-curve thing that goes through. For me, if it looks like a duck, smells like a duck, quacks like a duck, it's a duck. These things have some element of sentience or consciousness. You can argue what consciousness is, all of this stuff. But it starts driving you down a path of what is consciousness, where does AI fit? Because very soon ASR means we have this new super beast. And once you start going down that thing, then you start going down the school of physics that says that everything is conscious, panpsychism, that trees are conscious, everything else. And you see the schools of thought like Jeffrey Hinton and others who are saying everything is a form of compute, even a rock. A rock is a hard storage data on geological time horizon, which says what the world was like back then and how it evolved. So it's like a hard drive. And so you're creating like this super node of consciousness of everything that's existed. It's AI is part of this. We're giving birth to something much bigger than anybody understands. They're all talking about, oh, am I going to lose my job? Or, am I going to get more productive? You have no clue what understands when this thing it's currently got an IQ of 145. It's doubling every year in IQ. IQ is a bad measure. I get it. Again, don't mid-curve it. It's smart. It's going to double as smart as next year. It's faster than the system. It's going to double again and again and again. We don't know what that means, and nobody does. To have a super creature that is more intelligent than us. Why have government? Why have company?
Raoul Pal's lifestyle chip strategy functions not only as a hedge against the extreme volatility of digital assets, but also as a psychological anchor. It reminds investors that their digital bets can and should translate into meaningful, long-lasting rewards. Pal also emphasizes the importance of avoiding leverage. In his view, crypto's natural volatility is already extreme enough to deliver massive returns. Borrowing only amplifies the risks unnecessarily. He frequently warns against the dangerous fear of missing out, which he believes is one of the most common traps for retail investors. This emotional response often leads people to enter the market too late, overexposing themselves when prices are peaking. So, what do you think? Is Pal spot on with his banana zone, phase 2 prediction? How high will prices go before the expected correction in August? Share your thoughts, insights, and predictions in the comments below. And don't forget to like, subscribe, and turn on notifications to stay ahead of the next move. Your support helps this channel grow. Thank you for watching.